What is a full-time trader, guys? Doesn't have to work outside of that source. So using trading as a full-time income and doesn't have to work outside of trading to derive that income. That's a perfect example, isn't it? Often people say to me, I go, what's a full-time trader? And they go, somebody trading full-time. But the time bit is the bit in that question, isn't it? What is a full-time trader? But really a full-time trader is just somebody who derives their income from the market.
Positive, especially this weekend of the Art of Trading. Really concreted and solidly made me feel like I have made the right decision, and it's made me very excited about the future. Because I had no experience in the trade market, I still didn't know whether they were just another black suit trying to take my money, until this weekend concretely confirmed everything, and it was so amazing to see that they really are a family and they really are a tight-knit community.
My experience was very rewarding. The staff, I think, are so dedicated that it's a great atmosphere that you want to be around.
And we were talking about that risk and reward and how important that is, and what's my whole strategy for risk management, and if I'm having different portfolios, is my risk management strategy going to be different?
John Gow was unemployed when he started investing in shares through Wealth Within, a guide to help do-it-yourself investors make some smart decisions.
With trading, it's not about being in the market all the time. It's about just being in the market when it's the right time, because the share market, you can just trade with your laptop. I'm not being told what I can and can't do by a boss.
What your goal is what you can see in the future, isn't it? Yeah? Right now you don't know what you don't know, do you? And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there, you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah?
Well, joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale. Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show. Good evening and welcome to Wealth Within Live, the Australian stock market show where you ask the questions and we give you the answers about all things investing and trading. Now, we received a lot of positive feedback on last week's show, with many of you actually telling us you really did not appreciate how much your lack of education on the market was costing you in lost time and money. Now, that reminded me of a quote from one of my favourite authors, a gentleman called Zig Ziglar, who I was lucky enough to meet in person once about 20 years ago. And he actually said, if you're not willing to learn, no one can help you. But if you are willing to learn, then no one can stop you. Now again, we put together an information-packed show for you, and given it's the third Tuesday in the month, that means we'll be giving you our thoughts on world markets. Now, right now, I don't think there's much better time to do that. As always, we'll also answer your questions and look at the stocks you're interested in, give you our expert opinion, and a whole lot more. Hello, I'm Dale Gillham, Chief Analyst here at Wealth Within, and joining me tonight is Janine Cox, our Senior Analyst, and we're Australia's most trusted stock market educators.
Hi Dale, how are you going? You had a big day today, didn't you?
I've had an awesome week and it's only Tuesday.
Oh, good start to the week. It's always fun.
Yeah, I had a week off. Well, not a week, a weekend off. I took a weekend off. I went down to Geelong, my hometown.
Lovely. And what did you do?
I caught up with some friends, some old friends, and old in age and old in long time. And it's always good to do that, to have
It's
a nice barbecue.
important to have friends and to catch up with them, isn't it?
Yeah, it's really good because they just know who I am, in terms of, the daggy old Dale, basically. That sort of stuff. But yeah, so it was good.
So you don't have to impress anyone, is that what you're saying?
No, I don't have to.
Did you wear shorts?
I did wear shorts, actually.
Really?
Yeah, I did wear shorts. How's that? What are you saying? Don't have good legs?
I hate to see his legs at the moment.
I've got good. I won a sexy knees competition when
Are you kidding me?
I did.
Oh, jeez, I've heard it all now.
Yeah, I did. It was at college. I won a sexy knees competition, and that's...
Are they knobbly knees? Or?
No, they weren't.
I think we better move on.
Get on with it.
Okay, last week we had quite a few new people on the show, and if this is your first time, thanks for joining us. Don't take offence by anything we've just said. If you have a burning question for us, on the right of the screen is a chat box, so put your questions there. Moving on, it is the third Tuesday of the month, as Dale said. That means we're going to have a good look at world markets, so let's get into that now. Okay, on the screen there you can see I've got the S&P 500. Now looking at the left-hand side of the screen, there are a number of indices. Now we won't indexes. We won't go through all of them, but I just had a look at the top part of the list and what's performed most. So this is the year to date. Interesting that the New Zealand index, the top 50 index, is up 25%. The NASDAQ in the US, 23.89. The Shanghai Composite, 20.6, and the CAC index is 19.3. Now, Australia is not far behind at 18.36, the All Ordinaries index down there. Looking at the bottom of the list is really interesting as well. We've got, just to mention, one Jakarta SE right at the bottom, minus 7.8. Some of those Asian markets can be quite volatile. Look at the Seoul Composite down there, the Hang Seng's near the bottom. Interesting mix there we've got. And looking at the American market, where are we in there? We've got the Dow, which I can't see. There it is, at 14.8. So we're actually leading the Dow at the moment, Dow. And looking at the S&P, which is 500 on the right-hand side of your screen, you can see there that the market has actually been moving sideways. This is the monthly chart for anyone who's just joined in. We often look at the monthly chart and show you the monthly chart because when we're doing our analysis, this is where we're focusing most of our efforts to determine a forecast for the markets. So looking at the FTSE, I'm just going to flick through there, the UK market's really been volatile with everything that's been going on with Brexit, and we can see there it really hasn't moved on much over the past few years, so nothing much exciting to talk about there, and in fact a little bit bearish over the past couple of months. At the moment, it's until it moves back above last month's bar, then we don't know, it's got no direction, it's just sideways. So the Hang Seng, looking at the bigger picture, also bearish. Now I'll just remove this line, it's just showing the angle of the trend overall. But looking at the recent high here in April 2019, since then this market has really been quite bearish and pulled back quite strongly. Now clearly it's threatening this low here in October 2018, which is a real concern for this market. So if it takes out that low, then it's into a more significant decline. But at the moment, it's just sideways. So we're just waiting to see this bottom, this test in August 2019. We're just waiting to see whether it can move off from there. So it's the Hang Seng, but not looking great, Dale, there. And then the Shanghai Comp, the Asian markets, just move over to the monthly chart, and we can see very patchy trading and sideways as well there, but it's started to move up a little bit, so it is starting to look a little bit better. We've got the Straits Times Industrial Index, the monthly chart, so you can see sideways there. It still hasn't moved on and is looking quite bearish as well. The DAX is a positive light across world markets at the moment, so it's actually holding up quite well. It really needs to break and clear this prior all-time high, April 2015. See, as we know, that prior highs, now I'm showing a bit of analysis on them, I'm just going to delete that off the screen, but prior highs on the market can often represent resistance for future moves. So this is what's happening right now with the DAX in Germany. We can see there it's trying to push through all of that, and it's looking quite good at the moment. The Dow Jones Industrial is really pushing to try to get back above that all-time high. We can see all these tops here. So we've got the top in January 2018, October 2018, and this is the weekly chart. I'll just go back to the monthly in a minute. And we've got the high in April 2019. Again, it hit around these levels in July and again in September. So you'd think that this market is going to eventually push through, given the number of times it's actually tried to, and it hasn't fallen away. So I actually think that's a positive for the US market. I think it's trying to squeeze to the top.
Well, this is where the charts don't lie as opposed to the media, you know, and we've had a lot of people saying that with the chart, you're looking at, like, we've had comments that Germany's a basket case, you know, because of what's going on, and, you know, they're not manufacturing electric cars like Tesla and things like that, so they're trying to play catch up. But we're seeing Germany, like the DAX, as you said, it's looking quite good. It's not showing signs of that sort of stuff. The Dow's only gone up 2.5% in nearly 2 years. Now, how does that market crash when it's only gone up 2.5%? Normally, crashes are preceded by rampant speculation. They always are. So how are we seeing
And looking at that chart, there's no rampant speculation there.
No, there's
This
not.
is what they were saying about our market for, you know, many months, you know, that we were going to have a crash post the GFC. And I said, well, there's no evidence of that. And we've already had one of the biggest corrections in, what was it, 40 years or something. So therefore, why would we expect it to have another crash? And if it does have a pullback, it's going to be a correction rather than a crash.
Yeah, I talked a little bit about that with Jim Beach on my Monday US market interview, which went up sometime this morning. So if you haven't seen that, I talked a little bit about it with Jim. But I was going through some of our old stuff, our old presentations from like 10 and 12 years ago today. And you remember we did one, there was a newspaper article where they said, you know, the market meltdown, blah, 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 blah. And then we had...
And then you looked at the chart.
And then there was an article of David Potts next to it, who's a really lovely journalist who Jenny and I used to deal with all the time. And then his comments, and then you look at the chart and there was completely different things happening on the chart. But it was like the world was falling apart and yet the market went up. And that was preceding before the biggest bull run we'd ever had. On our marketplace.
Well, remember back here, I mean, back here the world was falling apart and the US market was going to capitulate. And even here in 2011, the same thing happened, and yet look what happened to the US market after that period.
Yeah, that's what I was saying to Jim.
That's actually the best time when they're all talking about these things. It's actually the best time to be selectively picking good quality stocks.
Yeah, and that's what I was saying to Jim. I said, if everybody's talking about the market crashing, then everybody that was worried about the market crashing would either have their money out of it already or not going into it. So therefore, the only people who are in it are the ones that don't think it's going to crash. So how can it crash? So it's sort of like that. And he sort of went, oh, that makes sense, doesn't it?
It does make sense.
It just really makes sense. But let's keep moving on, because have we finished with the market yet, or you got another thing to say?
That's pretty much it, unless you want to go back and have another look at this. I thought maybe just have a look what's happening in the month. So if we look at the past month here, we look across all the indices here, you can see that down at the bottom, the FTSE's actually at the bottom now. So it's interesting to have a look. Remember the chart of the FTSE that I just talked about. And if you're having a look at the top of the chart, we've actually got the Asian markets sitting there at the top, whereas they were at the bottom for the year.
And we're more aligned with some of these Asian markets than what
so
we
they're
are
starting
with
to
others.
move, but is that really a short-term move? We don't know yet because it's early days, isn't it?
Yeah, quite possibly. It is early days, but at the end of the day, these figures aren't telling me that the markets are seriously in danger of crashing, you know, because we'd be seeing different figures on that sort of stuff and different patterns on the charts.
You don't get these higher bottoms. So, for instance, we go back to the Dow and I look at the monthly chart. That's the yearly one. It's a bit of a jumble there, but I'll just expand that out so everyone can see it. Well, you don't get these higher lows if that was the case.
No.
You know, you'd be starting to get more of this sort of thing where these massive swings and reversals happening, and we're not seeing that now. I think that this has flushed out a lot of that, this big pullback we had.
Now, one of the things I want to do, and I'm not going to do it tonight, I know I did mention it too, that I want to go and look at history, because we've got data back on our market to 1875, and I wanted to show people the realities, because all too often, like I was saying on I think it was on my podcast or whether it was on my market report yesterday. I do so many recordings I can't remember what I've said when. But I was saying a lot of people run around with their face pressed up against a wall. And
looking at the short term.
They're looking at the short term because we see the news every morning. The Dow's gone up, the Dow's gone down, the US dollar's up, the US dollar's down. This is what's going on today. This is what happened today.
Yeah.
but that doesn't give you a picture of where we're going. It just says that's what happened today.
Well, so I was talking to someone who's done our course recently, and they said that, you know, they used to listen to that information, and now when they hear it, they just laugh.
I just laugh.
It's like what we did. Is we started reading the Fin Review years ago because you can actually connect the dots with what some of the people are putting into magazines and newspapers, doesn't matter what they are, and actually match that up with what's happening on the chart, so that when the stock does turn down, you think, oh, well, I knew that there was going to be a pullback because the analysis told me so, but I just didn't know exactly what it was going to be.
Yeah, the fundamentals follow what's happening on the chart. The chart's telling you early, and then what happens in the media or the fundamentals come out later, and then can validate what you already knew months or even sometimes years in advance. And I know that's hard for a lot of people to understand, and especially fundamental analysts, the people that read all the reports and read all the things about EPS and dividend yields and debt to equity ratios and all that sort of stuff. And they go, but how does that work? You don't really need to understand how it works. You just need to know it does actually work. So the charts will actually tell you in advance what's going on. And the more you watch what Janine and I are doing, the more you'll get convinced that the charts lead what's going on, not the fundamentals and not the economy. The charts are the leading indicator of what's happening. But I think we need to get into our emails now. If you finished, or do you want to keep going on?
No, go for it. Okay. Let's continue.
So let's get into the emails. And the first one we've got is from Anthony, who said, I was hoping both of you could look at TCL for me. So Janine's going to bring that up. I currently own the stock and bought it back when it was $11, so it's had a good run for me. However, recently it has had a bit of a pullback, and on the weekly chart heading sideways, and on the monthly chart starting to see more red. He says, I'm tempted to take profits, but from your experience, what would your exit rule be for this stock as it currently stands? Now, many thanks, and keep up the bloody awesome work helping those wanting to make a difference with their finances. So that's a nice comment, isn't it? I believe Anthony's just started our trading mentor course today, I think.
Congratulations, Anthony.
I think it was Anthony. So if it wasn't Anthony...
Well, if he hasn't, he will now.
He will now.
Okay, so we've got Transurban there on the screen for you. And looking at the monthly chart, you can see there a really nice trend that's happened over the last decade. And it has been a good stock. And except for this sideways move here, so it proves that there are stocks that are just not going to perform, and it didn't do so for a period of about 3 years. But finally, the last, 12 months, it's taken off again. We could be seeing a bit of a slowdown here and potentially a pullback to test those prior highs. But if we see this stock move on in November, December, then it could be breaking through to a new all-time high very soon. So that's Transurban. I like the look of it on the monthly chart. So moving to more shorter-term activity, we can see there all the opens and closes are getting really close together. There's a lot of indecision about this. Obviously, people are not wanting to sell off the stock. That initial pullback that happened was more market than anything else, what was happening with the market. And then a sideways move is unfolding. So even if it does fall away a bit, I'd still be expecting, Dale, to see this stock kick up to around the 1560 mark to test those little prior highs there, and then we'll know whether it's going to continue on or not. But if it does close any week below, what have we got here? Say about 1450. Then we know that it's heading lower down and needs a bit more of an adjustment before the next move up. But long term, I still like it.
Yeah, I mean, obviously where it is right now, it's come back again. So I do like this stock's a great stock long term. So, to me, I think you've got a good stock. Make sure you just set a stop loss underneath it, because it's not really looking that bearish, is it?
Yeah,
really?
Well, it depends on what you're risking, really, doesn't it? I mean, he's held it for a long time, so he's got a lot of profit sitting in
so
there on the trade.
That, but you don't want to jump too early, because this could just be stocks move up and then down and then move up and then down. That's what happens. Markets do the same thing, or they move down and back up again and down and back up again.
Yeah,
so
I mean, the only challenge you have here is, okay, it's triggered a lot of rules to get out.
Oh, yeah, already.
So far.
That was months ago.
Yeah, so this is week, sorry.
Oh, sorry.
I just changed it on you. Look, then the monthly chart, if we look at the monthly chart, you can see there we don't have an exit rule. So this is where the difference is. You can create strategies for much longer term trading and strategies for more short to medium term trading to suit whatever it is your portfolio goals are.
That's a good point. There's so many people, and we see it every week on the chat forum and the questions people are asking, and also on the comments with the show, is people mix all of that up. They mix short-term, medium-term, long-term.
In the one portfolio,
all in
it's
the
a
one
jumbled
portfolio,
mess.
and
I'll
there's
throw
no
in a few
strategy.
specky stocks to suit.
I'll throw
just
this
because
in.
I heard this report this broker was saying, and that just totally destroys what you're trying to do.
Yeah, I heard this kid on a skateboard with a green hat and a blue suit telling me how to buy this stock.
And then some buy and hold, and some I'm going to trade.
Yeah,
It's just a hodgepodge sometimes, isn't it?
And that's what we talked about last week with the market. With most people not understanding the market, it costs them a lot of money. So really, you've got to have a purpose for your stock, your portfolio. But we'll talk a little bit more about that later. But it's next question, yeah.
Okay, the next one's from Dale. Thanks, Dale.
Thanks,
did you write an email to
I
yourself?
I did. I changed my name. Sorry.
Morning, Dale and Janine. Could you please have a look at BlueScope Steel? What a good stock to choose. I've bought into this last week at $11.95. I went through each sector to find which ones have been down for the month and noticed the materials sector had been down over the month period. Okay, then this is what he's continued with. Then seen that BSL was doing well and going up, unlike the rest of the sector, and decided to buy it. Had a 4-week period of uptrends in mid to late August on the weekly chart, then 3 weeks of down to test the low that occurred in August. Plus, they're doing a share buyback just to make it more complex. I feel this may be a start of an upwards trend for this stock. Any thoughts? This is a really interesting one, isn't it?
That was a
BSL?
mishmash of stuff, isn't it? It's probably not a well thought out strategy, Dale, and it's not in the actual flavour of having somebody called Dale.
You haven't got a brother?
I haven't got a brother, no. It's
okay.
4 weeks doesn't make an uptrend, matey. It really doesn't make an uptrend. So I don't like your rules, but I like that you went through the sectors and you picked ones that were falling and you were looking for ones that are rising. So I love that. But all of that was wishy-washy rules, so that's not what we work on. But let's have a look at the stock.
All right, now looking at the monthly chart, I think we've talked about this one a few weeks ago. It's sideways, and right now the month is down. Last month it started to, it had started to move up. In fairness to Dale, it was moving up and started to look good. But notice how, this was a really volatile time. It didn't know where it was going.
No, it's really
so
choppy.
if you're looking at the weekly chart on the right, it traded down 1 week up, then down, big swing to close back up, 3 weeks up, and then it started moving down again. So there's no clear direction. Even the period before that, it's more or less that part of that sideways move.
So is there a buy signal there for you?
So it depends when he was looking at it. But right now,
been looking
no.
at it in August, so that was only...
Yeah, well, see, August it looked better. So in August, I could see what he was saying because there was actually, a nice move up there at the end of July, but then it reversed down again, see? And some people try to jump in. As soon as they see it's getting cheaper, they think
Let's
cheaper.
get into it. I'll buy it cheaper.
I'm going to say that with emphasis. But in actual fact, that was actually quite a bearish bar on the chart, short-term bearish. And then it started to move down, took out this low, and that was a signal that, hey, something's not right here.
It's not right,
it's not trending properly. So, look, at the moment, if I'm not specifically recommending anything to you personally, Dale, but just comments on the chart is more or less that, one, I wouldn't be buying it now if this was on the watch list, and two, if I owned it, I would be setting a really nice, logical stop.
And what's
stop
the
loss
intent too?
underneath
Is it a short, medium or long-term trade again? Like long-term, we could probably say we like this stock. Long-term.
Long-term, we like it as a stock to have on the watch list, but, it's like people have two different sides to your face. One side of your face is actually different to the other side of your face. Now, if I draw... Yeah,
so I can see a new Janine if I go on the other side.
If you'll let me, I could draw a line down and show you. Looking at the crosshairs here, I just put that on the stock, and you can see here that one side of BlueScope in the run up to the high, it looks really bullish and great. Now, as soon as I look from July 2018, you can see a totally different picture, a different stock. All of a sudden something's changed about the whole environment for BSL, but really we know it's just a phase that the stock's going through. It's part of its cycle, and the next cycle will continue. But what you don't know at this point, and it's always a question mark when a stock's in this limbo land, it can always go lower, and that's the risk really with BlueScope at the moment.
Yeah, it is. So be careful, matey. The next one's from Andrew, he actually wrote me a longer email. However, I'm not really going to share all of it with you because there's some personal stuff in there. But what I will share with you is what he wanted to talk about on a stock. And he asks about Rio. So we're going to talk a bit about Rio. I think we brought that up last week, didn't we, for a little bit? I can't remember.
No, I'm not sure.
I can't remember. But anyway, Andrew said, I've drawn an uptrend line from Rio's close or low close on the January 16, 2016 to the high higher low close on November 2018, which touches the bottom of August 2019. That's pretty technical. Basically, Andrew's read my book and he's trying to draw trend lines. So I've drawn an incomplete downtrend line from the high in June 2019 to September 2019. I'm waiting to see one lower high to confirm the downtrend, ideally below the uptrend line. Then one high as a buy signal for 15% of my self-managed super fund portfolio. So position sizing is a bit too high, matey. Am I on the right track? 8 to 12%, that's what you're looking for with position sizing. So that's what I would be doing. I wouldn't be putting 15% into any stock. But you could, based on a super fund portfolio, because you're looking at 12 positions from my book.
If you're following the book.
If you're following my book, that is, of course. So if you're not following my book, you could go up to 15%. That's not an issue. So, but I'll leave that up to you. But let's have a quick look at the stock.
Okay, so Rio, on the left-hand side of the chart, monthly chart. We always split our charts so we can see both. But for now, I'm just going to show you the monthly chart, and nice trend on Rio. He's probably looking at the weekly chart, but notice how the stock looks particularly bearish, or has looked particularly bearish recently. These bars up here are all indicating that there was going to be a pullback. So if you do the study and you understand how stocks reverse and the things to look for on the monthly and weekly chart, then you'll know in advance that it's more likely to turn down. So looking at the weekly chart, which is where you're talking, I'd say, yes, there would have been an uptrend line underneath all of these lows here, and the stock has provided an exit a long time ago. And looking at the downward move there, we've got, potential. Yeah, we do have a downtrend line in there, but the challenge for the stock now is it's going sideways. Even though it is above that line, just remember the picture on the monthly chart and where it's sitting, and now it's trying to make that decision, or the investors are trying to push it higher, but the traders are selling it off, so it's still sideways. So at the moment, I don't think that there's a great deal of conviction behind Rio. What are your thoughts there? Because I don't want to go into trend lines too much, because it's like if you were doing our trend line in module 3 and you were studying that, and you emailed the diploma, thanks, and you emailed in and were asking us these questions, it's really easy to clarify and help you get onto the right track, because that's what we do every week. We'll get emails, whether it's from students who are going through the course. This is the assessors will get emails. And Dale and I also get emails from people who are using our support service just to round out their experience and make sure that when they're applying their analysis that they're getting it right. So, that's really easy for us to help you in that regard, because you're coming from a point of knowing, the rules, and you're knowing sufficient information. But for me to try to help you right now on this forum with applying the trend lines, it's quite hard. It's not easy to do, because I can't put things in context for you. Well, it's only one rule. Yeah, in the book, there's only one rule for trend lines. So whereas we teach 5 in our courses, and you need to understand all the backstory, so to speak. So you need to understand a whole range of things, and it's putting your ducks in order. So just collecting, drawing a line across 3 peaks or 3 troughs is one of the things more down the line than the others. But right now, I've put a trend line on the chart for you just to show whoever's watching that this is the sort of thing that we're talking about, because clearly you can see the bouncing ball as it was moving up. The rise was happening. The bouncing ball is going up and up. The troughs are getting higher, so you can see that there. But then it's about understanding the context of when do I draw it and when do I not draw it. When's it valid? When it's not valid? Yeah. Because otherwise you could be exiting when you really don't have a valid trend line in place, and that's the risk with it, especially if the stock actually works brilliantly on trend lines.
Oh, it does. It does. This one works okay on trend lines, so I think you're doing okay. You've got a reasonable understanding based on your question.
He's got a decent rule to use. You see, that's the one thing is, and just looking at that high on Rio, just to see whether that high it's actually just a fraction lower there. So there's an opportunity to draw another trend line down there, but according to my picture, it actually is only just above it. There's no trend line entry there. So let's have a look at get into some of the chat, okay? Because I think that's all the emails that we've had for tonight. Great, let's do that. We've got lots of
questions. And the chat's gone
berserk.
It really, really has. We've got Vinit asked about, he said, hi, the stock name CSL is number 2 on the ASX, which is already at 248. I did ask him, "You're making a statement or asking a question?" He's just said, "I asked a question, but that's not a question." But we'll have a look at CSL. But he's saying, "My second question is, am I able to learn to get out of the stock if it's 5% less. What I want to learn is at what percentage should I book my profit. I also shall I sell all or a few stocks only?" So there's like 3 questions within all of that. Now, so, if we go and have a quick look at CSL, but basically, I'm not sure why you want to get out of a stock if it falls. I believe you're saying falls 5%.
Based on a percentage.
Based on a percentage, because 5% is too tight, and it's way too tight for CSL from that point.
Depending on how people trade. So, I mean, if you were trading really, really short term and it was someone who's an experienced trader trading leverage positions, then but
that's a whole different story.
It's a different ball game. But if you're trading more medium short term or short to medium term, and you're trying to make a capital return out of this, then it's not a stop loss that's going to work for you.
99% of the people watching wouldn't be able to do that.
Yeah, look, I spoke to a guy years ago. He actually turned up to one of our a live session, and he said to me he was trading and setting his stop losses at a percentage, and then I said to him, "You're going to be making the broker a lot of money."
Yeah, I had that at the Perth Expo one day. Somebody was saying to me he was day trading, and I said, "What are you day trading?" He said, "Blue chip stocks."
I wouldn't be surprised if brokers are telling them to do some of these things.
Oh, I don't know, but he said he was setting his stop loss around 5%. So I said, "You're not making any money." He said, "How do you know?" I said, "Well, you can't day trade blue chip stocks." He was trading them on fundamentals, and you can't trade them short term on a 5% stop loss. So it just doesn't make sense. None of that made sense to me. And he walked away in a huff. And then his wife came over to me and she said, "Good on you, Dale, you told him the right thing."
Oh, fantastic.
Because he's seriously doing the wrong things, but you can't do that. This is bullish. It's going up. It's simple as that. You don't need to take profits at a certain point. You trade, what we talk about, golden rules of trading is let profits run, cut losses short. Only ever exit when the stock tells you it's going down, especially a CSL. Don't just sell it because you think it's gone enough. And for me to teach you to where you might be looking for it to turn around, that's not something we can do on.
And it's all
Facebook
about risk, which is what tonight's about as well, isn't it?
Tonight's about risk. So let's have a look at another
CSL,
question.
I'd say, is pretty low risk at the moment.
Yeah, so that was that one. So the next one is we've got...
you got APT?
APT, yeah, sorry. Have we got APT, have we? Is that another one? Yeah, it is.
APT
Adrian,
and then... Yep, we're looking at the monthly chart of APT. So here we go. This is doing brilliantly well. Now, it's more a question of if you've got it, then you'd be holding it. If you don't have it, then you wouldn't be entering it in my book. Looking at the stock, it's actually trading up around $37. It could be slowing down a little bit. Notice how the bars are not really moving on. It's really struggling to push on, but you'd expect that to be the case because it accelerated so quickly in August. So now it's just actually time's catching up with it, which means the price is not going to move on as fast.
Yeah, this one's from Matthew.
Yeah, so look, Matthew, thanks for that. And I think it's a good stock. Just say to you, whatever your trailing stop loss is, it's going to be a challenge for you to get that trailing stop loss on there because this could be quite a volatile stock. But I'd make sure I would be really looking for one. The trend line's probably going to be too flat and too far away from the price action at this point in time. You may be able to get a steeper one at some point, but look, I would be looking for a different set of rules on that.
I think I would too. Yeah, I'd be looking for a different set of rules myself as well. But he actually owns it at the moment, which is nice.
Yeah,
so
lovely.
Just make sure you set an exit strategy.
And NAN, we've got NAN as well.
Yeah, he also owns NAN, so just give that one really quickly so we can move on.
Nanosonics is also looking bullish. Really nice little consolidation we can see there. These lows here give you an opportunity to set stop losses. Again, this pulled up quite strongly in August, so around the same time, so that would have made your portfolio look nice. And now it's actually looking like it's going to try to push through that high. So at this point, I wouldn't be... if I was holding this stock, I wouldn't be selling it. No. I'd be holding it for now and setting a stop loss underneath it. So,
okay.
But right now, I wouldn't be buying it either. No. It's just had a pullback and hasn't proved that it's going or confirmed that it's going to continue higher.
I've got a good question for you.
Great.
This one's from Adrian. He said, "Hey guys, just wondering if you could please give me some general tips about how to analyse company reports and whether it's important to see how the market reacts to such news. Thanks in advance."
You want to get your
economics
laughing?
So, company reports, Janine, I don't actually read them. which might sound strange to a lot of people.
It's not entirely true.
Well, it's not. Yeah, we read the summaries.
I do look through, but I just look through more to see, well, what are they up to? What's their main agenda at the moment?
Yeah, company reports are pretty much even a mysterious world for highly trained accountants and financial analysts. So, and generally what you're seeing there is not necessarily going to help you a lot. And obviously, the chart will tell you everything you need to know. And I met one guy one day, and he's managing like $1 million. And I said, how do you do that? And he goes, I do all the fundamentals. And I said, how much time do you spend doing that? And he goes, it's like 30 hours a week. I read all the company reports and this and that. And then I started teaching him, and he brought his whole analysis down to 1 to 2 hours a week.
Wow.
Because he threw all of that out because it really wasn't helping him. And that's really what it's about, is company reports are for the industry to really understand. And unless you're highly educated, you won't pick up a lot of the nuances in it. But really the chart will tell you everything you need to know about what's going on.
Look, I once met a fund manager who looks after smaller companies. So he invests in the micro caps.
Yep.
And for him, it was important.
That's different.
It's a different story, isn't it? Because he was really wanting to know what the developments were going forward with all the companies he was investing in.
Yeah, but you're probably doing a lot more work around that as well.
Yeah, he had his own formula and calculations that were specific to the fund that he was investing in, and he had rules around it as well. But just not technical analysis.
All right, so that's great. So thanks very much, guys, for putting all those questions in. We do have a lot more, so let's keep moving on. We'll get to our main topic for tonight, and then we'll get back into the chat. So
I'm looking forward to this.
There's a bucket load. There's some really good ones we're going to look at anyway. But the topic for tonight is that we're going to talk about is the number one trading rule for creating a profitable stock portfolio. Now, whilst Janine and I have discussed strategies for creating a winning trading portfolio in past episodes, this week we're really going to be explaining the rules for trading a profitable stock portfolio that will enable you to reduce your trading risk whilst improving your returns.
Now, Dale, you know that I think this is one trading rule alone that determines the long-term success of most traders and how much profit they actually make.
Well, yeah, I mean, for those of you who have been watching our shows for a while, you'll actually know we talk a lot about risk. But looking at the feedback questions and statistics that we get from you each week, it's really, and from the ASX survey that we sort of mentioned last week, or the shareholder survey, it really is very clear that most of you do not really understand risk.
What we know is that you believe that finding the right stocks or companies or stocks will get you the best return. And whilst on the surface this sounds logical, this is just one part of a bigger process. Now, the number one area you need to be concerned with as a trader is risk, and that means understanding what risk is and how to manage it. So tonight we're going to shed some light on this for you.
Now, there are two components to what we will talk about tonight, and with the first being what types of risk there are in the marketplace, and secondly, how to manage that risk. So let's get stuck into it. Now, firstly, there are two types of risk, as I just mentioned, that you need to be aware of. They are systemic risk and specific risk. Now, systemic risk is the risk of an industry or the economy or something collapsing. So I always say it's like the risk of the system. So the system that you're investing in. So the Australian economy.
Well, that's the worst case scenario, isn't it? The collapse. Yeah. But it's the risk of anything, because it could be that there's a political decision that's made that affects the market or the stocks that you're investing in, or it could be that there's something that happens in world markets that has a flow-on effect to our market.
The GFC was a classic example of a systemic risk melting down. So that was an industry or economy collapsing, basically, because the industry in the US was the money industry, is finance industry. It's the banks, because they were all over leveraged and all those junk bonds and junk loans and all that sort of stuff. So that's systemic risk. And so that's really critical that you understand that systemic risk exists. Now, we're going to go into systemic risk a little bit more, but we've also got about specific risk.
Yeah, that's stock-specific risk. So it's a risk related to the company, its activities, if something happens to the company. Mining companies are a classic example where something goes wrong. Maybe they're looking for oil and they don't find it. Maybe the mine floods. Then you've got the specific risk around the earnings, the future earnings of that company, whether it's short-term or whether it affects their long-term performance. That specific risk is impacting on your portfolio. Now, depending on your exposure to that stock would determine, how much that risk is.
For people investing in the property market, it's the specific risk is the actual
it's
house.
It's huge because, most people have got all their money in one house.
One house. So if that house burns down, it's gone, especially
if you're not insured.
If you're not insured. And we've seen that in bushfires where people have not had their house insured and they lose
people
everything.
that live near coastal areas and they can't get insurance.
And they can't. And that their risk, their specific risk is huge. But they're not looking at that, or they're not trying to protect that risk. And if you don't protect your risk, eventually you're going to get burnt.
Now, here's the real critical information that most do not know or ignore, and that being how systemic risk is out of your control, or in other words, you can't reduce it or diversify it. Hence, this is why practicing buy and hold investing with large portfolios is unwise and delivers poor returns.
So that now leaves us with specific risk, which can be reduced through diversification. Now, we find many traders do not follow proper rules around this area, and this is a real major reason why many fail or get poor returns. Now, remember the portfolio reviews I did the other week? Was your first week back? I actually did them. It was about 3 or 4 weeks ago, and every portfolio was not properly diversified for the specific risk. Some were only had one on. I remember I had one portfolio. I didn't even show people. The person had one stock and had their money in one stock.
Well, that's not really a portfolio.
And that's not really a portfolio.
The interesting thing is that one of our clients who actually became one of our biggest advocates, he actually, in the GFC, he was told to invest all of his money into Telstra. So he put all of his money into Telstra, and the rest is history. If you look at a chart of Telstra, you know what happened to that. But that's actually what drove him to come and see us, and he didn't even know how to use a computer at the time.
I was having, when T2 floated, I was having lunch with a journalist on the Yarra River, a business journalist, and he owned his own home, borrowed all the money on his home, went to a margin lender, gave them that as security, borrowed as much on the margin lender to buy T2, and bought into T2 with everything he had. Specific risk very high. This is a business journalist. Yeah, and then T2, if you know T2, it went down for 3 weeks after it floated. Now, every centre was going down. It was costing him a fortune, and he was paying interest on all those loans. So then he jumped out because he had to, because he was going to lose his house, and then T2 went up a bit. Went back into profit, and then eventually Telstra fell away. But that's specific risk at its worst.
Well, look, there's another story where we were at a convention, and there was a director of a company, and he'd been speaking to someone, one of our students, and the student came and talked to me and said, "Oh, this company's doing really well. This is what their forecasts are, and they're saying that the future looks bright." And then he came and said to me, "Well, I don't think that's the case, looking at the charts." And we had a look at the charts, and the charts were showing that was the opposite.
Yeah. So when you're talking about specific risk, what we're talking about here is if you have all your money in one share, like Janine said a little bit earlier, if you own one home.
Yeah, you're exposed. You may as well have your pants down. Sorry to be rude, but seriously, you've got to ask yourself, why would you do that? Because it's the biggest risk in you. You know how long it takes people to save, to invest? It takes a long time to earn that money, and just a small piece of that to go into an investment and then to put it at risk that way, I just think's crazy. Yeah,
we've seen people do that through the tech boom, with the bust, through the GFC. We've seen with Bitcoin putting all their money into Bitcoin and got bitten. So that's what we're talking about, is specific risk. If you have all your money in one position on specific risk, that's just suicidal. But if you buy 2 positions, now you've got your risk split in half.
A little bit through.
So now it's half.
Yeah. Okay.
3 is now in thirds. 4 is now in quarters.
When you say diversify, you're talking about diversify across assets, though, aren't you? Really?
No, not necessarily. Even within asset classes. Or you're saying to get more and more stocks. But correct. You do diversify across assets between property and shares and everything else. So that's one way of reducing risk, but that's also reducing systemic risk too, because obviously the property market's slightly different than the stock market.
Yeah, the timing of those curves is slightly different.
Yeah, so if you buy 4 stocks, your risk is 25% of losing all your money in one of those stocks, is now 25% of your total portfolio. But if you're in 5 stocks, it's now 20%. So that's what we're talking about in terms of specific risk and what you need to be doing.
Now, most people could buy 5 stocks or find 5 stocks, couldn't they?
Well, yeah, they can. And
most people could find 10 if they really wanted to.
Well, you don't want to get overconfident on that one, do you? So, but in the past, we've talked about position sizing, like we're just mentioning there, and suggested why you should never invest more than 20% of your capital in any one trade. So the rule for traders is depending on your knowledge and experience to hold between 5 and 8 stocks in your portfolio.
Now, do you want to go into why, or are you more interested in
Well, with
just
traders, with a trader, you want to go for more growth generally, and you're more active, and you're actively managing it. And it's about time. The more time and activity you're having in managing your portfolio, you can afford to be more concentrated in the portfolio that you've got. But if you want to,
But we're not saying specifically that that's what somebody should do, because they could go out a little bit more than that.
No, they could have 8, 9, 10, 11, 12 stocks if that's what they want to do. But it's just managing that specific risk. When you've got more specific risk, you've got to spend more time managing that risk. And this is another big area that people don't do, especially when they're looking at leverage markets like FX and things like that. Yep. They have no idea the specific risk they're taking and what they're doing. And when it blows up on them, they go, well, and they tend to blame somebody else. Whereas that's really where that lack of knowledge and experience really does kick them. But what we need to do is looking
at the risk diversification curve.
Okay, you can do this one then.
You will see. I was just waiting for an opening, but I didn't quite get it.
Sorry.
You will see that if you hold one stock, your risk's very high. Now, this is fascinating, this curve. However, as you enter more trades, the risk falls and balances out. So once you have more than 12 stocks, you start to take on more and more systemic risk, which isn't good. So our rule for traders is have your position size set so you hold no less than 5 stocks. So that's the absolute limit. So I'm not necessarily saying to stay on the absolute limit or the edge. But now, whilst you may not hold 5 stocks all of the time, as you may only hold 2 stocks, however, you will have cash in your bank available for another 3 positions, or 4, or up to the 8, as Dale was talking about.
Yeah, some people go, oh, okay, I can't find anything to buy, so I'll put all my money in these 2 stocks. High risk, really high risk. You're better off keeping money in the bank.
But the other thing is too, and this is one of my big bugbears, and you know that this gets me going.
Okay, can I go and get a chair and put my feet up?
I'm not going to talk that long.
Okay.
It's really about the fact that so many people, because you may have a broking account. Say people have got a CommSec account or a NAB with one of the major banks or with a private company, whatever company it is.
Just any broker.
Anyway, they all show you the return based on the stocks in your portfolio. They don't include the cash, which if you have decided you're going to run a portfolio, you don't just go out and buy stocks and start trading and say, oh, gee, Dale, I'm doing pretty well. I've made 50% on those stocks. Because it is an allocation of cash and shares, and at times, like Dale was saying, you might only have 2 stocks, but then you might have up to 5, 8, 10, 12, depending on how you're structuring your portfolio. And so therefore you can't all of a sudden ignore the cash that you had sitting and parked on the bench for 6 months because you weren't actually actively working that cash to get it into the market, or your strategy, because with our strategy we're quite conservative in that at times we might have a reasonable portion of cash sitting in the portfolio, and at times of the year we might be fully invested. Other times of the year we might only have 1 or 2
So what you're saying
shares.
Is people manipulate the figures to make themselves look good.
But you've got to consider the whole portfolio. So this is why when you sit down at the start, you actually say, okay, I'm going to invest 100. So if you invested, $50,000 or 100,000, 200, whatever it is with us, we're investing the full amount, including the cash and the shares, and that's how you actually run it.
Cool. All right, so you've just heard it all from Janine, and you better shut up now.
Okay.
Otherwise we're here till Christmas. But here's 2 more critical rules. If you lack knowledge and experience, you should always err on the conservative side and hold more trades, such as 8 to 12 stocks. And the second is that you must use stop losses. If you do not use a stop loss, then you need to hold more positions to limit the downside on your portfolio. Because
it's balancing, really important.
Well, it is, and we always talk about that, and that's one thing we're going to bring up on another show, is what that is doing to people's portfolios and how it kills it by not doing this properly and hitting that downside or getting that downside hits. Now, balancing out a portfolio risk is the first thing that Janine and I always do before we start to look at what stocks we might put into a portfolio. And so if you're confident you can actively manage specific risk, and I'll say that again, if you're confident you can actively manage your specific risk, not passive like, oh, I think I might do this, you need to have your stop losses, then you can have a more concentrated portfolio, and in doing so you reduce your costs. You'll also reduce your time to manage those trades, and you'll get a lot more profitability on that.
Now, the downside to this is that if you are not confident and fail to manage your specific risk properly, you'll achieve the exact opposite of what you desire. Think about that for a minute.
Well,
now, I think it's time that we got back to the chat and have some more stocks.
All right, so you're off your soapbox for a little while, are you? Okay, yeah. So manage your specific risk and learn about that. And as I said, looking at stop losses, making sure you exit stocks, and you're managing those position sizes properly, because the stocks will fall in line if you do your rest right.
Now I have to tell you to hurry up.
Okay, I'll hurry up.
Okay, let's
the
get
producer's in my ear saying, Dale, shut up and keep going. Okay, so we've now got stocks here. We've got, look at Cherie's looking in NEA, or NEMAP or NAN. Do you want to bring that up?
Yep, okay, I've
so
been told.
So you can type if you like that.
Thank you.
Yeah, we've got a very nasty producer tonight. So, but we've got a couple of questions here while you're doing that. Hi, everybody from Smoke and Joe says, hi, everybody. Which do you prefer in picking stocks, fundamental analysis or technical analysis? Thank you. Technical analysis all the way. As we've said before, that's probably 90% of our analysis is technical. Answer to that question. So let's get into Cherie, and I'll find her, what she says here.
Okay, near map. That's what we're looking at.
Yeah, I'll just find her comment somewhere.
Huge pullback from the high. I'll get started anyway and just give you a bit of a rundown. So you can see there we've got a 45 or 40% decline from the high.
Yeah.
It's actually fallen. The all-time high was above $4. Now look at it. It's just around. It went to $2.40. So it almost, it's not half of its value, but it's almost there. And these, don't ever think that a stock's just going to continue to rise. Eventually, the cards will just fall and it's going to come crumbling.
She's got 4 stocks and she's looking for medium term and one or two shorter term like NEA or NAN.
Yep.
So that's a no. Okay, let's go to NAN.
This is NEA?
That's NEA. Let's go to NAN.
Okay, so is this the wrong stock, is it?
I don't know. I've said NEA and NAN.
NAN we've already done.
We've already done.
Nanosonics? That's the one we did.
Oh, we already did that one.
And
so
we gave it a tick. We liked it.
We gave it a tick. So there you go. So from that point of view. When you're looking at your portfolio with 4 stocks, I wouldn't go in for too shorter trading stocks. You need to put a few more stocks in it if it's more a longer term, because you're looking for medium to longer term. So
yeah, so it would be your 4 stocks plus allocation of 6 positions of cash that are sitting there and you haven't invested yet. Or like Dale talks about in his book, you try to get to 5 stocks with small positions first, and then build your 6th, build up those, start building up the other positions, and then try to get to 8 or 10, 12 stocks.
Let's keep moving on. We've got Ross B. He's on tonight again. Hi, Ross. Good to see you back again. I think we've missed him for a couple of weeks, haven't we? Okay, he's asking about ResMed.
You've been controlling it last week.
He's asking about ResMed. Focus. So we'll go to ResMed. I don't own it as yet. It has moved up strongly for the last 2 years and pulled back recently from a high. Should I wait for a move back above its high? So we'll have a look at a bit about that.
Okay, Ross. Now looking at this, you can see here, nice trend up. And yes, it probably would have. We probably would have been able to get a trend line up underneath that. So it's trading below the trend line at the moment.
Yeah.
So it may have given. It just depends on what your rules were. It's looking a little bit bearish, but I wouldn't say particularly bearish overall. And it hasn't really pulled back much from the high. So look, I mean, it depends on what your rules are, but there are a couple of rules there to get out at the moment.
Yeah, but he's looking to get in and waiting, saying, do I wait for it to go through the all-time high? And the answer is it hasn't stopped falling yet, we believe.
That's right, yeah.
So
it's gone below a trend line. And look, that's why trend lines are so important, because if the stock's trading below it, it means the trend's been broken and therefore the stock could continue to fall further. So why would you take the highest risk point to enter?
We've got ABC family looking at BGA, so you can have a look at that. Ben Edwards asked about NEMAP as well. We covered that, Ben, so good on you, matey. Hope you picked that up already.
Bigger cheese is interesting. We've talked about this. I'm not sure exactly when, but we have covered this
about 2 or 3 weeks ago
previously, and you can see those tops there. Really bearish scenario for this particular stock. So it's fallen where I'd expect it to fall, which would have been at least to that level around $4.50. That's what the analysis will tell you. However, there's also the potential for it to continue to fall more because it's taken out this low. So there are also other levels that I've got on this stock down here. Right now, it's actually trading sideways. It may find support. Let's look at the weekly just to see what's happening short term. It's come off that bottom, so it is looking a little bit better, potentially a light at the end of the tunnel. But if it starts trading down again, really strongly below that $4 mark, then I'd say that it hasn't quite finished. But
right, so let's have a look at
keep an eye on
AWC. We've got a gentleman called Akram.
AWC?
His thoughts on SLR and AWC, but we did SLR last week, didn't we? So he can have a watch of that show.
Yeah, I think that's a good idea.
So
go back and have a look at what we said because it probably hasn't changed a great deal. Alumina is quite a volatile stock. At the moment, I really like this stock. Right now, it's been trading sideways and it's come back to test support at around this $2.15 mark. So, this was always a potential to happen. People look at this move up, say the week ending September, 13th of September, there would have been a lot of noise in the market around that time. And then, people see the stock, it's risen, they think, oh, now's the time to get in. But you would have jumped the gun too soon, obviously, because since then, let's have a look at how far it's actually come back. We can see there it's already fallen 10.5%. So people would be sitting in a loss if they went in and bought on that exuberance that occurred at around $2.50 and they'd be sitting here. But look, there is strong support for it around these levels where it's trading. It'd really need to start getting a move on and trade back above about 240 before I'd say it's on its way up again.
It's amazing how many people trade false rallies.
Yeah.
Thinking it's a new trend, and we hear these comments all the time. As on bearish stocks, people go, "It's been up for 2 weeks. It's been up for 4 weeks. It's been up for 4 days or 4 minutes," and they go, "Wow, it's a new trend." That's not a trend.
Yep.
And unless you understand what trends are, you're going to get it wrong more times than you're going to get it right, and that's why your portfolios are performing poorly. And again, just to really hammer the point we talked about last week, that's what is costing you a lot of money because you don't understand trends. That's not an uptrend to me, and this stock doesn't look good right now. Now, it may start to look good, but it's that FOMO that people have, that fear of missing out. Oh, it's moved up for 4 weeks. I got to get into this because it's going to keep moving up, and this whole fear of missing out causes so many people to get killed on their portfolios and get really average returns. And you need to have solid rules around buying and selling, and so that's really where we just keep seeing this, don't we?
Every time.
All the time. So let's keep going. We've got another Dale.
Oh, okay.
I've never seen 2 Dales on our chat forum, let alone one.
Okay, so what is Dale talking about?
This one's another Dale Norris. So, hey, Dale, great to hear you. Obviously, good-looking dude like me.
I reckon they're typing in that their name's Dale, so you'll see it and you might pick them.
That's a good trick, isn't it? Okay, so he says, hey, Dale, even though ISX...
Who's the real Dale?
Oh, I am. This guy's got a cute frog as an icon. But anyway, let's type in ISX. Is currently suspended. Would love to hear where you stand on this. Also love to hear about PLS and your professional thoughts on these would be great. Something that's suspended, there's not really much we can talk about really from that point of view. Obviously, it's suspended from trading. I haven't read the reports. I got no idea. Have you heard of anything that's going on with that stock?
No, it's not a stock that we would be following.
Look at it. It's a lot more speculative stock. When did it go into trading hold?
You can see we've got no data after, what's the date there? The 4th of October, week ending the 4th of October.
Yeah, so that's a week ago. Yeah. So there's not much data, so it's in a suspension. I once had a guy that was emailing me who'd read my book who had a stock that was in suspension for like 8 months.
Right.
And he was living on hope that it would open up and it would go up. And and another stock he had was falling heavily. It was down 90. I think it was down 50% when he started emailing me, and he knew he should have sold it. And then he emailed me again, it was down further, and by the third email it was down 90%, and the stock was still in a trading halt for 8 months. But there's nothing you can do right now, matey. There's zero you can do until it opens up, because they're waiting for news to happen to open it up. And then once
just
that
out
happens,
of interest though, let's have a look at it, because if we look at from that high there, that month,
you shouldn't have been in
that
anyway.
week, sorry, which was the week ending the 13th of September, is when it actually fell 42%. So that was from the high down to the close. The low, it actually went 50%. So there was a sign that there was something wrong right then and there, but people would have been hanging on because it had gone up all that way.
Gone up, yeah. I'd love to be able to tell you what was going on and give you some hope, but
actually,
I really can't.
There's a couple of reasons to exit there. So
Yeah, but that's just having some rules around it. But I understand why you're worried about it, because some people, when there's a trading halt, people treat it straight away as negative, and it may not be negative. It might be some company, offshore companies, looking to buy it at a really good price, and all of a sudden it shoots up. That can happen, and both Janine and I have
because
seen
we've
that.
seen stocks get traded down, and you know, I think I mentioned it in one of the other discussions that we had, whether it was last week or the week before, is that what is happening is a big question mark. So why is it that these stocks get sold down and then the announcement comes out? You know, you and I can read between the lines.
That's your
on
conspiracy
those
theories again. Mm-hmm. Okay, we're not getting onto those.
It's not conspiracy, it's actually fact, unfortunately. Have a look at some of the American shows on stock markets.
We've got a
like
17-year-old
Greed
on tonight, so Norbertel. His
Who is
name's
it?
Norbert. He's a
Norbert?
17-year-old. He said, how would I like to start investing?
Congratulations on getting in on the right foot.
He said, I'm 17, would like to start investing. What should I do? Please help. And then I think one of the guys said, buy my book. So that's a great start for you. Buy my book.
Yep.
Keep watching the show, matey, and go back and watch a lot of the other shows and really, really help you. But 17, you'll be retired by your 30. No problems at all if you do the right things. Let's keep moving on. The next stock we've got, so we've done that one. Francois, sorry. He's got Norberto. Obviously, he's answering somebody else. He's telling him to register for the stock trading game. Daniel K's asking about Z1P. Now, I talked about Z1P and Afterpay in my report this week, actually, because we've got Latitude Financial.
Do you want to talk about
floating.
it?
No, you can talk about it.
Okay.
But I'll just finish the question. Whether Z1P would be worth buying into, or if that opportunity has been missed. Cheers. From Daniel.
From my perspective,
I think it's missed.
Yep, that's an easy answer.
It's
so is
easy.
that all we have to cover on it?
I suppose so. But yeah, it is missed. But yeah, a lot of people think, you know, we're talking about Z1P. We've talked about Afterpay today. On my market report, I was talking about Latitude Financial.
That's available on the YouTube.
Yeah, that's Monday's stock market report on YouTube, so you go and watch that. So whilst I didn't go into the charts of Z1P and Afterpay, I did talk about Latitude because it is floating and it's a loan company, so providing loans. And they've been around, used to be GE Money.
Yep.
They're heavily backed, and people would be speculating whether they would do the same thing as Z1P. Z1P's up 800% in the last 2 years, and Afterpay's over 200%, I think, in the last 2 years. So good memory for an old bloke like me.
Is this going to be like a tech bubble?
Well, it won't be like a tech bubble, but I think, to me, in my mind, is Latitude is a better go from a float because it's been trading for years. It actually formed, this is going to set you back, isn't it? When I was in Westpac, back when I was a very young boy, there was a company that was owned by Westpac called AGL. Okay, that's morphed slowly into Latitude.
Right.
So that's how long this company, or iterations of this company, has been trading. So whilst I'm not suggesting Latitude's going to do 600% or 400%, I'm just definitely not going to do that. But I did say in my report that I thought it was overvalued at the price that they were asking slightly. Yep. And today they came out and said they've reduced the price a little bit, so which was nice. But I did think it was a tiny little bit high. But watch out for it. I'm not saying buy floats, because we don't buy floats. That's
a whole different story.
But
we could do a segment on that. What happens after the floats?
Yeah, we could do that. So let's have a look at that. So let's keep moving on. So we've done Z1P. Wow, lots of questions. Bloody hell. Shane's on board. Dan,
have you got a stock for me?
I will have in a second. So Dan Kroger said, hi guys, I've only just started investing. Well done, Dan. Good decision. My portfolio is doing quite well. However, LVT, so L for Lima, V for Victor, T for Tom, has limited my success. Should I continue to back live tiles, or cut my losses? So I'm not sure what you're doing, how many stocks you've got, and everything else about your portfolio.
I don't think we need to say anything
too much.
Like, really, because terrible. Just look at it. It's not going anywhere. It's going down at the moment, and there's a potential whenever a stock's going down strongly, it increases the probability of a further decline. So, it may find support where it currently is. However, it's not a stock that I would ever look to buy, and I don't think you would either, would you?
No, I would never buy this one either. But to me, it shows you what one stock can do to a portfolio if you don't balance your portfolio
Did he
properly.
say where he got it or not?
No, he doesn't even say how many stocks he owns and what the other stocks are.
So it's down 58% from the high.
Yeah, so that shows you really why you need to be using a stop loss. So get my book, it'll tell you what you do and everything else. And it would have got you out of that a long way back, and you probably wouldn't have bought it in the first place. So let's have a quick look at what else we've got, because as I said, we've got a lot of little questions here. We've got Bython said, after reading your book, I've established a 300,000 portfolio with 10 stocks. Well done, that's great. 50 ASX 50 blue chips, 80% buy and hold stocks, and 20% trading stocks. Is this balance appropriate to achieve 35k income? Look, that's rough.
Why buy and hold? Like, you know, that's the question I'd be saying. That was my
question. Why buy and hold? You should be actively managing them, because if they come down, they'll, like this stock,
portfolio.
Like this Live Tiles has devastated this young guy's portfolio. You're gonna, if you don't manage your stocks properly and you don't limit your downside, you're gonna really struggle to get that 35k, but it is quite possible. As we showed you last week, you're looking at about 10%. We showed you last week how you could do double that just by using some good rules around that. So not an issue to us. Wouldn't buy and hold, but you've done all right position sizing in that 10 stocks. I think that's fantastic that you've actually done
just
that.
remember the banks, you know, fell all together and wiped out the whole market. If you've got 2 or 3 stocks in there, big ones that come back 20 or 30%, then what's that going to do? Just cast a few scenarios, get an Excel spreadsheet if you can use Excel, and then just work that out so you can see what your risk really is by doing that.
Holy moly, there's so many. Somebody's talking about AMP. Yeah, stay out of AMP, guys. If you haven't heard us say stay out of AMP up till now, stay out of AMP. Right now it doesn't look good. But the last stock we'll look at is for Warren, PPS. He said, hi Dale and Janine, please give me your view on PPS.
Okay, now Praemium is another stock that's been sold down, and there was actually some good news that came out about them not long ago, but even so, the share price might have risen off the bottom, but it's a long way from that top back here in September 2018. So still 54% down from that high. It may be the end of an overall decline this low in June 2019, but at this point in time, how could anyone be certain of that given what it's doing? But look, there's short-term resistance here. Now, what the temptation is for a lot of people is to try to pick stocks at bottoms, and what we say is to either wait for the trend to be confirmed or use a trend line to look for an opportunity. Now, a stock like this has got enough history to do some back testing on it on the monthly or weekly chart, and we can see here that there's resistance short term around that 56 cent level. So looking at that, if it gets above that level, it could continue to rise quite strongly, but even historically you can see on the monthly chart that level's pretty strong.
Yeah.
So right now it's looking good. I mean, it's improving, but I would just be, saying that it could hit its head here again, and if it doesn't, then potential upside is somewhere around the 74 cent mark.
Yep.
Short term.
Okay.
Right.
Just to sort of finish up, I got a thing from Ben Youngman saying about an email about Cochlear. I don't remember getting that, mate. I answer all my emails from people. So I don't remember getting it. We've had a lot of questions here, guys, so if you haven't had your questions answered or your stocks looked at, then I'm sorry, we just can't get to them all. It's just, even if we sat here just doing stocks for the whole hour, we wouldn't get to them all. So, but it's about learning and education, not just telling you what we think is stocks. But if you like the show, you're sitting here and you're watching the show, and obviously you like it, otherwise you wouldn't be sitting here watching it. Make sure you hit that like button. Remember, it takes nothing, and also you need to subscribe to the channel. I know we get over 2,000 views of this channel or this video that we're doing live, and over the next few days, and I know more than half of you don't subscribe to the channel, so you just hit that big red button that says subscribe, because when you're doing that, it costs you absolutely nothing, but it means a hell of a lot to Janine and I, and helps us, gives us a little bit of a pat on the back for the work we do to do this for you, but it also helps other people find the channel and tells YouTube that you do like what we're doing here and you'd like to see more of it. So please, right now, hit the big red button, hit the like button, so that helps everybody, and we can all have a great show every single week, because there's so much Janine and I want to do with this show and expand on it, but we can't. Right now we're a little bit limited in what we're doing, but with your support we can take it to a whole new level again. But that really does bring us to the end of the show, doesn't it, really?
It does.
I've had a good time, Janine. I think it's been fantastic.
Thank you for your great questions. You just come back with some really interesting ones every week to keep us going.
Well, they do. Some of them keep you on the toes and then start your conspiracy theories. So please, geez. But I hope, as I said, we do hope you've enjoyed tonight's show, and thanks for participating there. As I said, there's been a lot of questions here. But remember to share it on your social media with your friends too. Hit that share button, onto Facebook, Twitter, YouTube, you name it, whatever you got. So the more people that join the show, the more we can share with you and the more we can do so. And we all learn, and that's fantastic.
Now put the show on the calendar, because we're back next Tuesday at 7 p.m. Make sure that you're here, same time, same place. If you cannot be with us live next week, we're always happy to receive your questions. So send them to info@wealthwithin.com.au and just type Wealth Within Live in the subject line.
Well, that does bring us to the end of the show, and again, we hope you really enjoyed it as much as we have in bringing it to you. So always, thanks for taking part, and we'll see you next Tuesday at 7 p.m. But for now, goodbye, good luck, and good trading.
Have a good night. Bye for now.